Hi, and welcome to this new episode of the ChargePoint podcast. And today we have a guest, Paul. Do you want to introduce yourself? Welcome.
Hi, Christoph. First of all, thanks for inviting me to the podcast. I'm very happy to be a guest in this episode. Introducing myself, I've been in the EV charging space for the past 8 years. I'm an advisor for strategies within the product and technology ecosystem space. Basically everything which happens between the car, the charger, and the clouds behind, which I call the ecosystems. Now, I'm coming from the telco space originally, and I was moving into the tech and platform/marketplace space. So I'm not a let's say person which is coming from the BMWs and Daimlers of this world. I'm more the telecommunication and tech guy which moved into the EV charging space. So I'm seeing everything from the systems perspective in a way. So the EV for me is like the phone, it's like the end device of the systems. And I've been working for a roaming platform for quite a while, where I was helping up to build up the product department. And I was also working for a large American CPO in San Francisco, which I helped bring into Europe with a founding team of 4. And so this created a lot of knowledge for me, which I'm leveraging and using to help companies, mostly within Europe, but also the US, to help strategize their tech. And I'm also very happy to recently work a lot in Norway, where I can see through the crystal ball what might be happening within Europe within 2 or 3 years' time, since we know it's a very mature market. Yeah, and I'm very much looking forward to our conversation, Christoph.
Fantastic. Thank you, Paul. Yeah, likewise. So let's dive into the first topic of our conversation today, I think, which is quite obvious given your extensive background in roaming. So again, a very important topic for CPOs and EV charging professionals at large. Can you tell us what's cooking in roaming, what's happening, with a fear regulation that kicked in, where that's going to leave the EMSPs? So yeah, tell us, what do you see? How is it all coming together?
Very relevant question, because from my perspective in the roaming space, not so much was happening over, let's say, the last maybe 7-8 years, but right now it's really exploding. So we see a lot of things popping up from left and right. And roaming is essential because charging contracts have come into existence since the early days of eMobility, typically issued by the MSP. And since the driver's charging contract needs to be recognized at ideally all charging stations in a geography where the driver wants to go, roaming takes over to establish interoperability between all charging contracts and all charging stations. The drivers can authenticate themselves via RFID cards, mobile phone, or the vehicle's plug-in charge contract authentication. As opposed to this, there is the concept of direct payment. This form of payment does not need any contract. You pay at a station through a payment terminal or a QR code without the need to authenticate yourself. While contractual payment has been a very dominant payment type across Europe, the FIA regulation brings in a new dimension. They give credit card companies and payment terminal providers, for example, a chance to break this up. Each DC fast charging station in Europe with a charging speed over 50 kilowatts needs to offer a direct payment possibility through a terminal or a QR code. And this has impact on roaming. If at each European station, every charge can be paid without any contractual authentication, we would not need roaming, right? So now my thesis is we will see a coexistence of payment types. That means there will be still roaming hubs and peer-to-peer connections serving continental interoperability, especially in the B2B fleet segment, where the driver is not the owner of the vehicle. In the B2C segment, however, I expect a larger shift towards direct payment systems. So I guess people like, my father or late adopters in the market, there will be a large share of those which will want to use a charging station like they used to use a gas station in the past.
Sure.
At the same time, roaming will be still very relevant also for fleets. What I find very interesting which we will see, and I will speak about this in a bit, is the new regulation in Germany, which allows a new way of how to pay for your electricity as a truck driver, as a logistics company. So this I think is going to be very interesting. Now, looking at the entire roaming space, and I said it looks like roaming is under attack a bit. So I talked about the direct payment before, but we also see new players. So far, the players which we have seen are the traditional players, the Hubjacks, Gireffs, eClearings of this world. Also, CPMS platforms became kind of roaming platforms because they're building a lot of connections into the space, a lot of peer-to-peer connections, making them a hub at the same time.
Indeed.
To a certain extent. But we now also see new players in this space. Like, for example, there's one which is trying to shake up the industry a bit with new messages. And what they are trying to achieve is to say roaming is a common good for everyone. Roaming is a service which should be basic service. And on top of those services, they would like to build new value propositions, new services which are attractive, which can be monetized to the players in the market, and they call it a collaborative platform. So we can be excited to see what they will come up with over the next couple of months and years.
Interesting move, yeah.
At the same time, we see, as I just said, the traditional roaming platforms, which have been there for a couple of years. They are also changing, and they're also reacting to the market. Only just a couple days ago, there was an announcement by Hubjack that they are creating new subsidy called the Hubjack Financial Services Company, or GmbH, which means they will have much more opportunity space to create new value proposition within the entire roaming space. So we can expect, and this is of course a lot of speculations from my end right now, but we can definitely
what could
expect.
It be? Yeah, I'm curious to hear. Yeah, what could it be?
Yeah, what could be? So the speculations I'm having is, first of all, I think this is something which many people expect. There will be a banking license. So Hubjack will, they most likely obtained a banking license right now, which will now enable them to install and to come up with many more services and value propositions as before. They, of course, will be much more regulated. Since a bank or company with a banking license has many more regulations or needs to stick to many more compliance than Hubjack ever had to. But at the same time, that means you can keep money. If you have a banking license, you can just keep the money for a while. You don't just forward money or data from A to B. You don't even forward money as Hubjack. You just said who is the owner of the actual energy and who's the owner of the debts which are being made, and then the money is being transferred from the MSP to the CPO in a basically separate process. Hubjack is never keeping money, and this is the difference now. So you could do near instant payments. You could reimburse CPOs, for example, much quicker. You could come up with new pricing models. You could come up with a combination of dynamic pricing and near instant reimbursements, for example. And I don't know how far Hubjack has worked on this, but say if you have well-designed grid integrations, you could also receive signals from the grid to the design prices, and you could suggest prices or combine those prices suggestions together with a CPU offerings, for example. So there are a lot of things which you could do. You could even, if you will, you could also come up with a wallet for drivers, but I do not expect that a hub like Hubjack would do such thing, because then you start to compete with your own customers. But we can definitely see quite some, let's say, extension of the competition in space, especially in the billing and settlement space, which was indeed not perfectly organized in this industry so far. It's still a big pain point for many CPOs.
Absolutely. Exciting, interesting. Yeah, it's not a topic that we at Flexecharge are working with actively. So it's certainly interesting to hear your thoughts as one who really knows the space. Do you see other potential developments that you'd like to mention also today?
Indeed, I do, Christoph. So there is a very new development, and it's been worked on for quite a while already in the background. There's a word in German which is called Durchleitungsmodell. So very difficult to pronounce for everybody who's not German, but you can translate it to something like a pass-through model. So what is the pass-through model? It's the idea that the CPO is basically, or let's say the MSP is not buying the energy from the CPO, and the CPO is buying it at the wholesale market. But basically the energy provider, or the MSP, what it is in a certain way, the MSP is buying the energy directly at the wholesale market. So how is this supposed to work? So basically, you as a driver, you can go to a charging station, you use a charging station basically as a socket, because you bring your own contract. You can bring your own contract from back home, and you pay your contract deal, which might be, I don't know, 25 cents or something, which are usually much cheaper also than the energy which you pay for driving energy, for driving kilowatt hours. And this is also a big criticism in the current system which we know, the CPO MSP roaming system. And interestingly, in Germany, this pass-through system, pass-through model, was allowed for trucks now in July. So it was already tested with an ecosystem of a company called Decarbonize, with a 1 instead of an I. Decarbonize 50 Hertz, which is a big TSO, transport system operator in Germany. Stromnetz Berlin, which is a DSO, or distribution system operator in Germany. And a company called Lichtblick, which is advocating for this on this MSP/energy provision layer, to say, what if the driver or the logistics company for trucks, in trucks cases, is bringing the contract to the charging station? It changes a lot, of course, because roaming works differently then. You don't need to basically make the deal with the CPO, which is paying another wholesale partner, but the MSP is directly basically receiving money from the wholesale partner, which then needs to be redistributed in a way back into the system through network fees, as we know it actually in the actual grid. So you as a private person, you can get your contract from anyone each year when your contract ends. And this is supposed to now be competing with a known ecosystem.
Interesting. So, but don't you think it will jeopardize the business model of CPOs, that they will really have to rethink it? Because I'm just thinking that they are making, of course, better margins on the public charging. And if you bring your cheap contract from home, how is that going to look for the bottom line? How do you see that?
Yeah, for sure. For big players like the market leaders in Germany, I say EnBW, for example, or big players in the European space, I'm pretty sure this is not a welcome model to work with. They for sure would like to stay with the model which they have nowadays, especially because they also make the margins. They have their local monopolies to a certain extent. But for companies, logistics companies, which of course want to move the trucks from A to B over the entire country, they don't want to be dependent on local players. They would like to basically hedge their prices in a certain way. So we'll see for sure tensions. We will see more tensions there between established players and maybe small players which are hoping for this to happen. And we will see how this will coexist. It's definitely a very interesting development, which Decarbonize, for example, believes it will coexist to the current systems. And we do see a distinction between truck charging and passenger car charging still. But this might be a disruption which could have impact on the systems as we know it today.
Yeah. But who is advocating beyond those companies? Do you know that there are the authorities, public authorities in Germany that have been coming out saying that they support this initiative? Do you see some backing also here from authorities?
I would say, if you look at the market as it is today, it is a not very transparent market. And there's some truth to it that the market as we know it today would need a regulation which is more similar to what we see in the space, in the private space, for example, where you can choose your contract. And everybody who advocates for a open market and open competition, and this could be also authorities, of course, because authorities which are protecting the consumer would also advocate for lobbies which are speaking for logistics companies, for example. I can see following this regulation if this will become a success. It needs to be adapted, of course. And why would a CPU adapt to this? So CPUs are having a very, very relevant position in the entire ecosystem or in the entire market. So, of course, it's difficult to come up with a new model and challenge all the players which already have been established.
Certainly is, yeah.
It might just fail because the system or the lobby for staying the CPU, which we are, and playing the game we play, is too strong.
Absolutely. Yeah, there are certainly a lot of forces at play here. Okay, interesting. We'll follow that definitely on the German market, and let's see if it spreads also this idea to other countries. We'll definitely keep an eye on this. We mentioned earlier, we're talking about the CPMS had expanded capabilities into EMSPs. We've seen that happening for years already. So this is really a hot topic which we love to dig into with our guests. So talking about the evolution of CPMS, the market of CPMS, their value proposition, their positioning, and how that matches the CPO's expectation, be there huge CPOs or regional or national. So how do you see, from your perspective, the evolution of the CPMS market?
Yeah, big question and very relevant as well at the same time. Over the past 10 years or even more, we saw a big influx of different CPMS systems. They grew over the time, they had more features, they went from a 5-station setup to a 4-digit station setup. And we saw many acquisitions, especially by oil and gas. The acquired platforms are partly still being used, but in a reduced manner or being substituted. We still observe a vivid CPMS market, and CPMS clouds will continue to defend their strong position in the industry, especially with players which are not having the required software development and domain capabilities. There are numerous current and future CPOs which need and will need the service offering spectrum of the cloud solutions, especially as CPMS platforms come as fully integrated block of services which are aligned with one another in a very coherent manner. This is a strong value proposition which will stay attractive for new entrants into the electric market and players which stay within the standard spectrum of EV charging, basically. We surely will experience more M&A activity as well, like we have recently seen with Spiri and Edenred, for example, as the demand for tech acquisitions and capabilities coming along with tech acqui-hires is only starting in the fleet segment. What I'm definitely seeing is that tech landscapes within especially large players, large companies, and oil and gas is definitely part of it, or big fleet players, have reached a complexity which is hardly to be served with a single one-size-fits-all platform. So those platforms which have been successful over the past 10 years, I do see disruption there coming from developing the platforms themselves. That means we already observe a lot of CPOs which are deciding to build their platforms themselves. And there might be questions coming, why do you reinvent the wheel? We have those platforms already. Truth is, the reinvention is not really taking place because those platforms are not being mostly built from scratch because we do have solutions nowadays that can be purchased. And I'm not talking about an entire platform, I'm talking about platform components which you can buy to really orchestrate your entire platform. So if you want to have your own OCPP stack, you can go and buy it. You can buy the code, you can buy it as a license, you can buy it as a basically API service, which is speaking to your programming language in the landscape. And this is not only true for the OCPP stack. So you can purchase a billing system, you can purchase a MSP CPO side roaming functionality, the basic one, of course not with all the connectivities to the players, which you need to set up yourself. But you can buy pricing engines, you can buy, for example, or just generate loyalty systems. Loyalty systems usually, in many cases, are also legacy systems which need to be connected to the individual solutions which you buy into your landscape. So what I'm trying to say is that a big player, as a big fleet player or oil and gas player, you don't only have legacy systems which you need to interconnect with other systems. You can't also just simply buy a platform and hope to solve everything. So what I'm seeing in the industry, which is a bit, let's say, not ideal, is some of the players are even buying 2-3 platforms. Sorry, not buying the platforms, they are buying the services of those platforms. And they run 2 or 3 platforms at the same time. That means that they have a lot of redundancies. They have a lot of OCPP stacks. They have a lot of billing engines, which they are maybe not even using.
Why do you think they do that? What are they trying to achieve with having 2 or 3 platforms?
What I believe and what I observe is time to market. So we see an influx of private use cases, especially when I'm talking about fleet use cases which touch depot, which touch workplace, which touch those use cases which are not out in the public. And those use cases are very much different from what we see in the transit space. So the transit space you can very easily scale if you say, well, I know how to build hubs. I know how to adjust my CPMS systems towards the transit station. Then I can roll out and scale. It's a bit different in the space of private fleets. So sometimes you have a completely different setup than you just had yesterday. So you just enter a real estate and you have 3 floors. Sometimes you have 1 floor. You have one fleet manager dealing with all charging stations. Sometimes you have an external company dealing with it. Sometimes you have complexities which you can't serve just with a single solution, like you could do it in the hubs. So efficiency is key to be successful in that space. And big players which have been dealing with, let's say, oil and gas or especially hubs before, struggle in that field. And this is where we will see, as I believe, a lot of individual development to harmonize those platforms and to build ecosystems which are fitting to one another, rather than buying platforms which seem to work for certain use cases and then they are not really integrating properly.
Yeah, absolutely. It feels like there's a transition happening, and it's natural in a tech space which is still young, right? I mean, you mentioned yourself the telecoms where you come from. We are still at the early days of this industry, so there are things that needs to shape out. But would you say that very specialized niche services that they maybe will not develop themselves, but that they can plug into their platform? Is it something you could imagine happen, or do you think they would really try to build everything?
We will see both, I believe. Just as we've seen it with, I think, in the old days. If you look into the past, you can even draw some conclusions to what is happening today. If you look at Salesforce, for example, or SAP those days, at some point they couldn't serve the customers anymore, so they just opened up the platform and said, well, take my APIs and build yourself, or take my APIs and try to find someone who you can plug in. So just as Salesforce is making this available, I see a similar development in the CPMS space. And there are platforms as well which are opening up and say, hey, we have API'd 97 of our services, you can access each and a single one of that. And we will have, and I believe strongly, we will have highly specialized services which are plugging into those systems. I mean, Flexecharge would be one of them. So I do believe that especially energy systems, which is a very specific or requires specific knowledge, especially also regarding the grid systems, regarding upstream revenue towards TSOs and DSOs. I do believe that this will be much more relevant than today, and it's already happening in the Nordics. So we see this influx of need. Even though like systems like Flexecharge, I mean, I know your system a bit, so you can also use a OCPP proxy to not require an API to be plugged in. So that's a very, very good way around to still be able to function in a third-party system without the necessary API. It just shows that there is need, but the platforms are not open enough yet, or not all of them are open enough yet to allow this. And this will be absolutely future orientated to go that way.
Absolutely, yeah. Is there anything else? I think we talked when we prepared the episode, you talked about also the integration between the car and the cloud and the CPMS. So tell us a bit more about this.
Yes, indeed. Some entrepreneurs seem to be very, let's say, unsatisfied with the speed of evolvement within the EV charging space. I mean, for example, we have the LCP protocol 2.01, which is for sure superior to 1.6J, which is still not experiencing a big adoption. And this has to do with the fact that it's not downwards compatible. So you can't just install it and hope to still talk to all the other parts of the ecosystem. So what we do see is that we see open source software coming up. So if you come from the charger, or if you come from the car, go over the charger to the cloud, you see R needs to speak a language with the charger, and the charger needs to speak a language with the CPMS system, and you need to have the same communication means on both ends. So if you have 1.6J and on the charger, or on the charger embedded software in the controller, so called, which is speaking to the CPMS system in a different language or in a language of a lower version, of course this won't work because it's not compatible to one another. So both need to be updated at the same time. So what can you do? So either you give subsidies and say, this is a standard, go for it. This is what the Americans do, by the way, with the NEVI standard. They ask for 2.01, otherwise you won't be able to receive money. Or you just build open source software and say, guys, this is the open source software. If you want to talk to the charger, the charge controller will receive our open source software. And you'll be able to speak with it just because it's free. And those companies most likely will make the money making available services and making available maintenance for the chargers or charge controls and so on, whereas they accelerate the speed of adoption of higher level protocols. This same happens on the CPMS side. So we see a 2.01 OCPP compatible CPMS, which is nowadays a big project in the open source space. And I believe this to develop even further to increase adoption speed.
Absolutely, yeah, understand.
And same we see currently in the space, which is a big pain to the CPOs nowadays. So a lot of CPOs struggle with the availability of the chargers. And this is a known problem in the industry. And we currently see quite some AI startups which are coming with trying to understand better than a human being what is actually really happening with a charger by mixing data coming from the station, by mixing data from experience, and by blending into the entire mix, also experience from EV drivers to understand, is it a driver problem, is it an operational problem, is it a charger issue, what can we do to then be able to route the problem to the proper position in order to repair it in time.
Yeah, again, certainly some innovation coming from, as you said, startups that, and probably some that even have not started yet, which will come up with some solution super niche in the next few years. Yeah, great. So you mentioned yourself energy as maybe a kind of a service that is hyper specialized, and this is definitely something which is dear to us, and that's why when we prepared the episode, we agreed we wanted to talk also about this called virtual power plants, the famous VPPs, which is also a topic that you're following. So how do you see, what do you observe in terms of opportunities when it comes to deployment of virtual power plants for charge point operators? What do you see on the landscape?
Mm-hmm. So VPPs or the VPP as such is not a new term. It has been there for many years by now, and along with the decentralization of grids, we keep on hearing this, and this of course makes sense because we have an increasing number of solar plants. We have an increasing number of private homes being able to sell energy into the grid. So this is not a complete new topic. Where it's new and it's still not very well adopted yet because we don't have the critical numbers yet is in the space of EV charging. Because the application in the EV charging space starts to make sense with a lot of cars. So the more cars you have, the more energy you can serve to virtual power plants. And so how does it work? So the idea is that VPP is basically able to draw energy from any battery which is being parked, being plugged into a charger which speaks a bidirectional language and is able to offer energy to the grid. And the grid needs it usually for stabilization of the grid. So there are a couple of use cases which the grid needs to stabilize it for, let's say, 15 seconds, which is called the FCRs, frequency containment reserves, for 5 minutes, the AFRRs, and so on. So there are a couple of use cases which a grid would like to use car batteries for. Now, even though we currently have a lot of hubs and we have a lot of DC chargers being out there, which are unfortunately not the best use case for this. So unless you have a big battery at a transit site, you are not being really the best candidate to serve the grid, because the use case at big hubs is I go to charge fast and I escape the charging site, so there's no battery to access. So battery storage can be accessed at DC sites, that's true. What is going to happen over the next couple of years is to have access or to build up access to AC chargers. Of course, AC chargers have a much lower capacity to transfer energy. So if you need a very quick update in your grid, you won't be able to get this done unless you have a central battery which is doing this for you. But the great use case with AC chargers in cars which are parked for a long time and at workplaces, for example, or back home, is that the batteries can be connected to the chargers for a long time. So you can buy this flexibility at any time of the day. And if you are a CPO which is owning 10,000 chargers which are able to be directional and be able to transfer the energy from the cars into the grid, you can start making money. And I have seen numbers which say that the market volume of grid stabilization for EV batteries could be as much as about 1 billion euros per year in 2030 in the EU and US each. It's of course rough numbers, but we do see that there's a big opportunity for CPOs to also finally sell energy not only downstream but also upstream. So get prepared, fleet operators, because you will have the opportunity to sell battery energy towards the grid. Yeah. I do believe, however, that there's still a little bit of a bottleneck right now, because we need affordable bidirectional chargers to serve the use case, of course.
Yeah.
If those chargers are not, let's say, affordable enough.
I think, what about the perspective of simply just throttling down the charging, on demand, so not putting the energy back from or bidirectional, but just slowing down just by 1% or 2% on all the fast chargers in your portfolio, so that you can respond to the demand of the grid stabilization. That doesn't require bidirectional. Have you heard of this kind of use cases?
That's true. I was just thinking about V2G in a way that I'm talking about the actual V2G, the bidirectional case, for sure. Truth is, of course, that you can also, and this concept exists already for many years and is being used. Companies which pioneered it in Netherlands, for example, like Jetlix. So we heard of those companies which are able to sell energy just because they are serving the energy only at specific times of the day, for example. This is true for AC, for cars which are directly plugged, but to refer directly to your case, of course, yes. So you can say, hey, I'm not selling all the energy to the car which is just about to charge it, and I can just cut off some of that energy in a time where it's needed for the grid. So that's true, yeah. So this case also exists. But I do imagine that in most of the cases there's also big batteries on the sites. And if we extend the entire case, you can also say if a hub is having a solar panel, if a hub generates the energy to a part themselves, they have even more reason to sell energy upstream. But truth be told, you can also cut off the energy which you're currently selling into waste.
With of course the challenge that you don't want to disturb the experience of the EV driver, of course, because they come to a fast charging station, so they want to fill up their car. So it has to be very subtle, discreet, so to speak, and without compromising their fast charging expectations. So but it's a topic that's dear to us, and we'll definitely talk more about this. And this is something that we're looking at Flexi. So, if we, so 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 if if we move away from science fiction, or at least just predictions and future perspective in Europe, and jump on a plane, was it 10,000 kilometers, and fly to Africa? I'm alluding to this because you told me about an amazing trip that you made recently, where you went to Uganda, and you didn't not only just chill around, but you also had some interesting encounters. So can you share a bit about this very interesting project of yours?
Indeed, yeah. Thanks for referring to this. I had the chance to spend some time in Uganda in the beginning of this year. Before I went there, was actually a larger vacation, which I also wanted to use to understand what is happening in Uganda in terms of electric mobility. And I was surprised how much is actually happening, because what I've seen in Uganda is a unique way to develop their eMobility, which I found very exciting. So I was happy to talk to one of the persons from the government, Alan Muhumuza, which is responsible for eMobility in Uganda. And I decided I wanted to make a little documentary. And so I recorded everything, all the interviews which I had. So with Alan, I was able to understand how much green electricity exists in Uganda. So this is something we can dream of in Central Europe, at least. Maybe Norway is ahead of that. So 83% of electricity in Uganda comes from hydroelectric power, which makes eMobility even more useful. Or it makes even more sense to really use it. You don't need to greenwash any energy. It is just water, which is making the boda bodas, as they're being called, the two-wheelers in East Africa, which are being run. So what is different to what we know? There are not as many passenger vehicles, at least not in percentage, or for sure not in percentage, as we in relation know from European countries or the US or China. The main means of transport are either public transportation, this is where you use buses, or it's the typical two-wheelers, which I just said are called boda bodas in East Africa. And the idea is to electrify those. So you would be looking a lot for electrifying cars or EV production facilities, as we know it in Central Europe, for example, China or US. But you see a company there called Kira Motors, which is a big bus production company, and they have the ambition to be the leading electric bus provider in East Africa. So that was very interesting for me to hear. At the same time, this is, by the way, this is sponsored by the government to a large degree. So you see there's a lot of funds coming directly from the government. At the same time, you do see very brave private entrepreneurs which decided to join the electrification. And I was very lucky to also have a day with them at their site. It's a company which is building electric two-wheelers, and they are not only building those electric two-wheelers, but they also building an entire battery swap station infrastructure, like we know it from the early days in EV charging, or like we might know it from, there's a company called Gogoro, for example, in Taiwan. They will do the same in Taiwan. You have a lot of swap stations, so I can buy a boda boda for the same price as I could buy a normal gasoline boda boda in Uganda. And now comes the interesting part. I can operate it at 40% less than a gasoline bike. And this is what makes it so exciting, because no one, and I learned it a few times there, no one in Africa, or especially, I don't want to be too generalizing, no one in Uganda, that's what I heard a few times, would buy an electric bike just because it's green. No. It's not the driver just because it's green or it's electric. It's because it's more affordable, or just because I can operate more affordable. So price is definitely the reason why I would buy boda boda or an electric vehicle there.
And when you say 40% cheaper, is it taking into account just the energy cost, or also just the running cost because there's less mechanical parts, or I'm just curious about those details.
So I was told it's the entire OPEX. So basically it's all the TCOs, so the total cost of ownership, which includes maintenance, which includes the swapping, which includes using the electric bike. And so charging infrastructure in all of Uganda is not very developed, just because everything happens in and around Kampala, the one bustling capital. So it's very centralized. But But just because we see those efforts also in the, especially by the two-wheeler company, they have a charging provider of the future, just because they are creating this charging need from inside the Kampala and take it outside of the city and make electric bike riding and battery swapping, make it attractive to citizens of Uganda. And they also have other visions, like, for example, to say they would like to make it also a battery company, which says that they would be responsible for the second and third life use of the batteries which are being used in the vehicles. So there are a lot of visionaries out there which are adjusted to the market needs in Uganda, which I found absolutely exciting. And I decided to produce this small documentary. It will come out in 2 parts, as I expect today. So the first one is about to be finished, but we still need to do some fine cutting. It's around 10 minutes, and it will talk about the macroeconomic space in Uganda, whereas the second part will dive deeper into the management of the two-wheeler company and to understand what the visionaries are planning and how they would like to evolve electric mobility in Uganda.
Yeah, well, fantastic. Yeah, it's very exciting. Solar energy going hand in hand with mobility, and solar plus the hydro. So they have the hydro as a base, as you say, and then they have also lots of sun. So are those, I'm just curious about those hubs that they plan to deploy. So are they also bringing solar energy so they can fill those batteries that then people can come and just swap on their way? How does it look? What's the vision of those hubs?
Yeah, this is another idea, because, as I said, there's a lot of hydroelectric power in Uganda. So this, of course, needs to be connected to a grid, and grid stability is an issue as well. Still, not necessarily in Kampala, but in places which are more rural. So we do see autonomous solar chargers that increase also or that the usage of solar panels is increasing in Uganda. So we can also imagine that we would have stops, maybe more rural areas where the grid is just not being that developed, and it's not going to be within the next 2 or 3 years, to see more autonomous stations which generate their own electricity. I can imagine that very well.
Yeah. Exciting, fantastic. Yeah, that's wow. Yeah, what an amazing trip indeed you made, and a step into almost a different planet. But it certainly helps to give us some perspective on what's to come and happen in the next decades when it comes to new energy and mobility. As I see it in Africa, I mean, they might, as they did within other areas, hopefully leap some development stages and not go through the same stages as we did in Europe or the Western world. Right? And hopefully they will develop their own technology also, as you said, right? That's, as you said, battery. I mean, is it realistic? Are we talking about battery manufacturing in Uganda?
Absolutely. I mean, they are absolutely thinking about this, especially at the large bus company. There are still large parts being imported mainly from China. I think parts are from India. But Central Africa, I mean, I'm talking about East Africa, but Uganda is basically almost actually cutting into Central Africa. It's very rich in resources. So in future they could build a lot of their vehicle parts, including the battery, from what they source in their own country or maybe neighboring country. The neighboring country is the Democratic Republic of the Congo, which is, as we know, one of the most resourceful countries on earth. Yeah. So I think Africa has a lot of potential, and I would be happy to see more solutions coming from Africa or built by Africa for Africa, rather than just being sourced somewhere else. Because in the end, the materials are being sourced in Africa, being sent to China, being reproduced in a certain way, and being sent back to Africa. Now, the thought which I had before also is that we can also learn something from Africa. And the fact is, I mean, we have the situation right now. We say, well, we need to cross a chasm to find the high adoption of EVs again. But truth be told, our EVs are just too expensive today. So I think Norway is successful in EV adoption because it's also a wealthy country in a certain way. So on average, the EV is taking less of your salary in Norway than it is in Germany or than it is in Poland or Spain. So for sure, if you would allow cheaper vehicles to to be available, we could cross the chasm much cheaper. Rather than talking about the chasm, we should just make cheaper cars available.
That's that's been said, repeated for a long time that again, they are fascinating, but the solution is not a 2.5 ton huge SUV electric, right? So what did I see the other day? I was almost laughing. The electric Bentley. I mean, it's not. I mean, we know it's small, light vehicles if we want to address sustainability issues. So yes, 2-passenger cars, the European border, as you say, right? What is it? Yeah, for circulating in the cities. Some 2-wheeler, 3-wheelers for the last mile deliveries and so on. Yeah. So absolutely, we should definitely also look at Africa. Very exciting. Looking forward to hear more. You have to keep us posted about the release of those 2-part documentary. We'll be happy to share with our audience, and who knows, also get you back on the podcast sometime to tell a bit more about the next trip. So thank you very much, Paul, for joining us today and sharing your thoughts on those various topics and your amazing trip and project. And I'll look forward to seeing you around, and have a great day.
Christoph, thank you very much as well for having me. Thank you for a very exciting, interesting conversation. And I'm very much looking forward to see you in person again. Maybe next week. There will be a big conference here in Berlin, so who knows?
Correct. Exactly. Yeah. Probably see you there.
Yeah.
Okay. Thank you very much.
Have a good day and speak to you soon.
Bye-bye.
Bye-bye.